Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, April 26th, 5:13 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we downgraded yesterday to caution with the break of the 21 EMA across all the indexes, tried to get back above it with a gap up this morning and failed into that. We'll talk about what changes we made to the portfolios based on that action today when we get to the tail of the tape. Check over here at the trend gauge. Market leaders showing neutral. They're deteriorating somewhat this week, with the exception of a few stellar stocks that continue to hold up. The updated 21 over 21 on Friday will make it clear who are the leaders, remaining leaders, and who are the laggards. Trend gauge across 3 time frames. Short term downgraded from up to neutral today with the failure on the bounce back into the 21 EMA. Medium term, we're still at neutral, same as long term. We've got bifurcation there with the large cap indexes being above their 50-day and 200-day, and the small and mid being below, as the fallout from the bank liquidity mini crisis continues to work its way through those indexes and really keeping them from making any progress. So what happened today? In last night's video, I talked about gap up strength in Microsoft and Google, wondering if they could save the indexes. Well, it was pretty clear by the open that Google wasn't really going to contribute much, but Microsoft stayed very strong. But the gap up that we had reversed into the 21, now declining 21-day exponential moving average on the NASDAQ and the S&P, and it failed there. But the strength in Microsoft and that trickled over to Amazon kept the NASDAQ 100 green, although well off the highs. Final numbers on the day are growth composite, RG7, 7 ETFs, down 1.04%, S&P 500 down 0.38, NASDAQ 100 up 0.6, Dow down 0.68, mid caps down 0.86, Russell 2000 small caps down 9/10, global diversified 60/40 stock and bond down 0.3%, both stocks and bonds down today. In-house GROTECTION got some leadership, got some nice action out of the stocks that are remaining in the portfolio, and our hedges and directional plays worked. Still underwater, but just barely down on the day. So let's get right into it. We'll start off, as we always do, with a chart of the S&P 500. Blow this up a tiny bit. And you can see the high of the day here, 40.90. Where was the 21-day moving average today? 40.91. You can check on a 5-minute chart here, and you can see there's the gap up reversed immediately. Then we attempted a rally from 40.62 up to 40.90, failing right into that 21-day moving average, and then basically trend down into the close. Same thing with the NASDAQ 100. The gap up, a little bit of a fade, not as much, but this rally that topped at 315 poked its head above the 21-day moving average, which is at a little bit above 314, but that failed also into the close. You can see the trend down after we peaked right around noontime today. So not a good show for the indexes. One close below is acceptable, but the velocity of the selling yesterday and the gap up gave some hope to the bulls, but that was pretty quickly dashed. Let's go to the Dow Jones Industrial Average. Microsoft couldn't keep it from breaking below the 21-day moving average. So add that to the mix with a clear break today. And then we've got mid caps, further deterioration in FRC today. A little bit of overhang, continued overhang on the banks, making a lower low. 2 closes now below the 200-day moving average on mid caps and small caps. Another lower low after breaking below the 21 EMA, and note how the slope of the line is rolled over. Also, the stochastic's negative across all 5 of the major indexes. Let's go to the dollar. Dollar was weak most of the day, but worked its way higher to close at the top of the range, although still down for the day. And we started off the day with the dollar being weak and gold stocks being strong, but that didn't last. They sold off immediately. This is one of the puzzling things of today and not a good sign for gold and silver, as that inverse correlation with the dollar and gold stocks being a possible safe haven in the face of a banking crisis, that didn't work out today. In fact, an outside negative reversal, closing right on the 21-day moving average for gold. For GDX, outside negative reversal, closing slightly below the 21 EMA. That's not good, and we're getting into oversold territory. You can see by this example here, you can stay oversold for quite a few weeks in the gold and silver patch. Let's go to SLV, down 0.7, still holding the 21. Let's want to point out today, before I move on, these big cap stocks held up the indexes quite a bit today, as RSP broke the 200-day moving average, and it was down over 1% today. Compare that to the market cap weighted S&P that was just down 0.4%, and then even worse, QQEW weighted NASDAQ down 0.75 versus a 0.6% gain on the market cap weighted NASDAQ 100. So not a good sign there. Let's flip to bonds here. BND bonds down across the board today. Kind of strange. Would have expected a flight to safety with the markets continuing to sell off, but that's not what we saw today. We saw, well, let's go to the 5-minute chart. Bonds started out kind of strong, faded as the day went along most of the day, and then basing into the close. That's BND, that's the broad bond index. TLT long term, same thing, basically making a higher high and an outside negative reversal there also. Let's go to the yields. Here's the 10-year yield, kind of within the range of yesterday's gap down. TYX 30-year yield undercut the 200-day moving average, bounce there back above. So negative outside reversal in bond prices, positive outside reversal for the yields. Let's go to Bitcoin. Bitcoin was a flight to safety yesterday and a gap up today, but a big negative reversal as the day went along on Bitcoin. Look how something happened here. I don't know what, but look at that selling on Bitcoin. This is the Bitcoin futures, big drop the last 30 minutes into the close. Let's see what that's doing after hours. It's basically settling after hours, but I didn't see any news on that and didn't really see anybody talking about it, but uh, that's somewhat of an anomaly. Okay, so those are the major indexes that we talk about in every video. Let's go to the tail of the tape here. Market state still neutral. You can pause this so you can read through everything. VIX down or up slightly today, still hanging around the 21 EMA. Fear and greed is at neutral now. By the end of the week, we may have flipped from bull case to bear case, with 2 closes now below the 21 on the S&P and the NASDAQ. Some news, FRC, the bank liquidity, down 50% yesterday after its earnings. They didn't do a Q&A on earnings. They didn't do any. The management team dropped the ball big time on this. Maybe they know the writing's on the wall, but expect this one to get taken over either by a brokered deal with the government or by another bank. But down 50% yesterday, down another 30% today. Day count from down 1 to down 2, second close below the 8 in the 21 EMA. We've gone down from like 90% chance of a 25-point basis cut down to 72%. Came in with expectations at neutral today. Wanted to see what happened with the rally into the 21. with the gap up, but that gap up failed into the 21, sending our expectations to negative for tomorrow, breaking this 4070 to 4078 support level that held for a while on the S&P, and then of course the rally back up into the 21 failed badly. Same situation, failed that support resistance area on the Nasdaq 100. Um, Bitcoin was strong, but I gotta highlight that as, I mean, it's still close positive, but that's a big reversal. Uh, Gold and silver, as I said, started positive and faded. Semiconductors strong today. They were very oversold, so maybe just a dead cat bounce on them. And software strong, led by Microsoft. KRE, look at this action intraday. So open up slightly higher and rallied, and then just reversed to red. I mean, this was up over 2% at one point, rallied a bit into the close, but one little, I mean, just barely off of lows of this banking crisis. Even though it's improved quite a bit on some of the banks, but the fears are there. I guess some of the earnings are okay, some are bouncing, others not so much. Very obviously, FRC uh, in the crosshairs of the shorts. So let's see what's next here. Gold and silver with N phase getting massacred on earnings, down 25%. They said growth has gone negative in the U.S. That's not what you want to hear from the next big thing, green energy. That took TAN, the solar ETF, down 5.5% today. Oil's also down. Builders down, and transports down again, following through from the negativity. What is that? Following through to the downside. Uh, Following through to the downside after the warning by UPS today. So, portfolio, we bought QID when we failed at the 21 day on the NASDAQ 100. We trimmed UPRO on that same failure. We sold SARK as ARK was just getting too extended to the downside, took our profit in that. After hours, we bought Meta as Meta is gapping up about 10%, up 12% now. We bought it around 229, which is certainly a recent high. Let's look at a weekly chart of this. Where's 229? You got to go back to this big gap down failure on February of 2022. Seems longer than that ago. That kicked off the death spiral that bottomed under 100, rallying back as Zuckerberg trying to reinvent the company. So we took a small position in that after hours on the gap up. Uh, and those were the changes. So that change, we're actually probably closer to a 0.6 now with the meta buy, but reducing exposure. This is a difficult thing to do. You always are rooting for the stocks you own, and for the bullish. The strong market is good for America, but you have to get to the mindset, and I've seen it quite a bit, that when you break the 21 and you rally back into it, and the slope of the line rolls over and you fail into that, you have to understand that that is a complete change in the short-term trend. When things like this happen, we really minimize new buys. It's got to be something special, like a big gap on monster earnings numbers, or we'll step into the short side on some things, as we did today. Do want to note that stochastics have deteriorated for the RG7, for the major indexes. The NASI RSI has also rolled over. This is a very strong indicator for growth, and it's another reason for us to be tapping the brakes and lowering our exposure. Unless we break the 50-day moving average, we would expect it to be around 0.5 to 0.7, depending on how the remaining positions in the portfolio hold up. And how individual sectors are acting, if we get a good opportunity to take a short in some of the sectors. But the bottom line for today, gap up into the 21, faded badly. Although Microsoft kept the NASDAQ 100 green, we broke another level on the S&P 500. And not a good week for stocks, not a good way to close this month. You know, they sell in May, go away. That that may be what we see. So let's take a look. It's weekly chart Wednesday, so let's go to some weekly charts of first of all, we'll go through some daily charts on things that I wanted to show. I showed KRE, big winner on earnings today. CMG, big gap up 13%, 525% above normal. Wish they would split the stock. Microsoft, we showed that blow up after earnings today is Impinge, something that we owned a while back, trades very erratically and on the thin side. It's down 27% after hours on earnings. Ouch. Let's see what else did we didn't show Google, and you know, the big gap up after hours on Google ended up being a big nothing burger today as it closed basically flat. Very disappointing if you're a Google holder or a holder of the NASDAQ 100. So those are the focus list stocks. Let's flip to the weekly view and go through the 21 over 21 list. We'll start off with the ones that we own. Here's NVIDIA, great chart, gentle pullback on lighter volume into the 50-day moving average. We did sell some of our position yesterday as it went from slightly green to red during the holding period. What we still have, as long as it holds the 50-day moving average, we're expecting to hold on to it. Here's Meta with the gap up above the highs of this 5-week rally, two-week on lighter volume pullback. The volume patterns are perfect on this. It's up 12% after hours. Owen continues to act very well. Slight pullback for the week. Made a new high today before pulling back into the close. Lulu, tight action continues, relative strength continues, even with it being down for the week. TLT, chopping around this 200-day moving average. General Electric starting to pull back after hitting pivot plus 20%. Lantheus also starting its pullback after hitting pivot plus 20%. Axon sitting on the 50-day moving average, having broken the 21-day now. Normal pullback so far, but again, look where it stalled. Pivot plus 20%. GE Healthcare undercut for the 50-day moving average / the 10-week moving average for the second day today. Down 7% for the week, but it looks like it's holding there, and that is a low risk buy, and also one of the O'Neill rules to buy leading stocks on a pullback to the 50-day, but that's assuming that the market is in your favor, which it is not currently. Wingstop, Wingstop with a breakout following Chipotle's lead today with a breakout on some nice volume. Elf finally pulling back after a big run, just a tight inside day. Look at that relative strength line on this. One of my biggest mistakes for the year, getting stopped out of this on this close, high volume close. There was massive selling a couple of weeks and didn't re-enter. That was really the mistake, was not re-entering very clearly on this earnings gap higher at 60. Just should have done it. And then another opportunity here on a pullback to the 50-day. ExxonMobil going sideways while oils deteriorate. GDX 5 weeks up, 2 weeks pulling back, no major damage done. Mondelez holding nicely after its base breakout. FedEx broke down from a 3 weeks tight as UPS reported terrible news, terrible numbers. Ferrari continuing tight on light volume after its move out to a new high. ITB after its breakout consolidating nicely. DraftKings pulling back after its attempted breakout from a cup base. Mobileye reports tomorrow. That'll be interesting. You can see it's in this 23% deep flat base. Earnings lockup expiration this week, but hasn't been selling. In fact, you saw nice buying last week on it. Intel owns over 90% of this. IoT, this failed its breakout. We got stopped out this week on that, now sitting at the 50-day moving average. Art continues to deteriorate. Look at the series of lower highs that it made going back to January, now breaking recent lows, getting a little too extended to the downside. That's why we booked our rest of our gain in SARK today, took some off yesterday, the rest off today. And that's it. That's your weekly look at the 21 over 21. And with that, we're going to wrap it. As always, you know why we do what we do here at Revere, to keep you out of a negative sequence of returns entering into retirement when the market gets healthy and growth stocks come into favor. With the capital that we've preserved, we'll take the account balances back to the upside. If you're interested in this approach, you can reach out to me, Don at revereasset.com, or my partner, Dan Stewart, Dan at revereasset.com, or the phone is 855 Real Wealth. That's 855 732 5932. Remember, of course, it's not how much you make in the markets, it's how much you can keep. I had hoped to be able to retire this chart, but weakness in the markets, this chart is just a sell off away. And that sell off is happening right now. How deep it goes, we don't know, but we do know that as long as we're above the 200-day moving average or the 40 week on a weekly chart, stocks cannot really break down seriously. Our pullback right now is about 4%. We're another 2.4% down to the 200-day moving average. We're ferreting out earnings and reduced estimates going forward, as well as the recession fears. That's really what's going on with this pullback, plus FRC bringing the bank liquidity issue back to the fore. But we're keeping an eye on the 25 Titans, and some of them are bending, but not really breaking yet. Tesla, the weakest one, and it went further down today, but 23 out of 25 are still above their 200-day. Actually, 24 out of 25 are still above their 200-day moving average. So uh, we're really in tactical mode right now with this pullback. With that, I'm going to wrap up Wednesday, April 26th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening. Have a great day.